Hello everybody, welcome back to another video. So as you can see today, we've just had finally our first profitable week trading the 50k combine. So you can see here, we had one trade on Tuesday, minus 161, and then we had one trade on Friday, plus 511, resulting in a winning week of $350. After like 3 losing weeks, this is the first week I started. Next one, and then we finally have had a winning week. Now, what did we change last week? We changed our model. So we traded a new model this week, and so far you can see the first week of trading a new model is successful. So let's hop across into Notion and see what went down this week. Okay, so as you can see, we have now 5 weeks of profitability using this new model on gold. These 4 weeks, the first 4 weeks here are back tested weeks. This is the first forward tested week of trading this new model. So we can see Monday, no trade was taken. If we go in, we can see that this was the Monday daily candle that we had. This up close day, Monday 29 September, first day of trading the new model and first day of this week. So you can see we opened New York midnight. There was a 1 hour fair value gap left open here below New York midnight, but price offered no entry in this presented fair value gap. So it never came back to it. So I would have put my stop loss here and gone long in here if it had, but it didn't. So no entry. We don't chase price entering in fair value gaps above New York midnight. One of the rules of the model is you have to enter in a price in a fair value gap below New York midnight. Moving on to Tuesday. Today was a loss. So you can see this is Tuesday, this doji looking candle here, that was Tuesday on the daily chart. Now going down to the hourly chart. So we actually had 2 4-hour fair value gaps left below. This is New York midnight here. Looking below, we had obviously this hourly fair value gap, this 4-hour fair value gap, and this 4-hour fair value gap. Now, if I'd chosen to enter inside of this 4-hour fair value gap, I actually would have had a profitable day because it actually just went higher from there and the day closed somewhere up here. But I honestly, it seemed like too far away from where we opened. I didn't really expect price to retrace that much. And so I actually, to me, the most obvious fair value gap to enter in below New York midnight, because there was a few to choose from, obviously, on this day, was this 4-hour one right here. Because we have this like displacement range here, and that was kind of in a discount of that displacement range there. If you drop a fib on that low to that high, you find equilibrium. That 4-hour fair value gap was a bit below there. But I mean, obviously I was wrong. It was actually, the algorithm was actually referring to this dealing range, this low to high, drop a fib on that, and this is in premium. So it went down to this one because it's in a discount. I just didn't really expect it to go that far. It seemed like too far away. If I had entered in here, put myself at that low, you know, I would have actually had a profitable day. I thought maybe this was just going to be left like breakaway gap, you know, because we created this like consolidation-y like balanced price range area and then kept going higher. So I wasn't fully expecting that to get repriced to. In future though, I guess I'll look on the lookout for this and look for potentially when you have a Monday, it's about narrative, right? Like when you have a certain type of week that's expanding to the upside and you have a Monday that just goes higher, you know, Tuesday's going to come and stop out long traders before continuing to the upside. It's just a weekly profile. It is what it is, you know. But there was still a valid trade because I entered in it. I followed the rules of the model. I entered in a fair value gap below New York midnight. I put my stop loss in a pretty valid location. I didn't over leverage, you know. I didn't trade more than once. I didn't do anything wrong, so it's all good. It's all good loss, that one. But we will be on the lookout for potentially something like this happening in the future, and maybe exercising a bit more patience and looking to see if this more discount fair value gaps get repriced to. Okay, moving on to Wednesday, you can see here. Now Wednesday, I didn't trade at all because after Tuesday closed, we have a daily fair value gap formed. So even though I did not trade Wednesday because of this rule, there actually still was no fair value gap offered below New York midnight open anyway. So even if that fair value gap wasn't formed, I still wouldn't have traded Wednesday because there was no entry anyway. So there's just no entry. Thursday, going to Thursday, again, no trade on Thursday, okay? We could have traded it. After we closed Wednesday, this daily BISI's formed down here still, yes, but I thought it was unlikely we were going to reprice to that, and we have these two daily volume imbalances here, and I was actually looking for support inside of those and not to end this wick. See how we repriced down inside the premium half of that, the top half of that wick? That was like pretty much my discount objective for the remainder of the week, and then I wanted to see price go higher, and that's what we saw. So Thursday, no entry because we opened here, we traded higher. There was no fair value gap below New York midnight back inside this range. There was here, but by the time we got down there, this was the 10 o'clock candle here, and then this was 11 o'clock candle. So I'm not going to go long, even though I expect this to take us higher. I'm not going to go long at 11 o'clock. That's when I have to close my position every day. So no entry. Moving on to the last day of the week, Friday. You can see here, after this candle closed, showing respect of this second volume imbalance, and we traded into that daily candle's wick a little bit, and we closed respecting that. The next day I was very bullish. It was a very high probability bullish bias day. So I immediately saw this and I was like, yep, I'm definitely going to look for an entry today. Went down into lower price action, and we can see this 4-hour fair value here. We traded down through it a little bit, but we're just trading down inside that daily candle. This is that daily candle wick here. Okay, we're going back up, and look at the respect of the daily volume imbalances, how we trade back to the high of that one, come back down into this one, touch the low, the high, touch the high of that daily volume imbalance, that second one. And also, what are we doing? We're respecting the consequent encroachment of that 4-hour BISI right there. So that was a super high probability. I was very, very confident. I still like to keep my stop loss nice and far away at this daily range low, because if you look at the market structure, we have this Judas swing here, and then violated to the upside, going through that swing high there. So I was very confident this low would be safe, because this Judas swing here, when I'm entering here, we hadn't yet violated this to the upside. It was not violated to the upside. There was no market structure shift there at that swing high yet, right? And so I didn't trust this low. It could have potentially, oh, and also it was NFP on Friday, by the way. So we could have had some crazy movement happen where it like wicked down or something. Who knows, right? So I just wanted to keep my stop loss nice and safe, especially because it was NFP, especially at this low. I didn't expect that low to get taken. And I was actually sweet. It never even came. I basically saw no drawdown. It just went into profit immediately. And then NFP, I think, was like this candle here, this candle, going down, closing above the daily volume balance, treating it as support, constant encroachment being treated as support, and then displacing away towards these highs. We never got, I did want to take profit at those highs or above, but it didn't run all the way. So what I actually did is I took profit in the 11 o'clock hour, this up close candle here. When it ran above that hourly swing high, I took profit there. And that actually was the high of day. That was the high of day, pretty much, exactly. So very, very, very good exit on that trade. Very good entry, very good exit. Really, yeah, really, really great trade, to be honest. Really, really good trade. Really happy with that one. So I'm just really briefly going to show you on Topstep X, these two trades. So full transparency, guys. There's the losing trade here. The one I took on Tuesday in that 4-hour BISI, but it ended up coming down to the further one. You can see that loss there. And then here is my winning trade on Friday. And I just want to briefly take you over this trade a little bit and just show you some precision elements of this trade, okay? I mean, just look at that trade. Like, that's a beautiful trade. That's absolutely beautiful. In hindsight, we have hindsight now, right? Looking at this in hindsight, we can say, okay, there was obviously a really nice, the whole day, let's just mark the whole day, right? Like the whole day. Here's the beginning of the day, here's the end of the day, right? Beginning and the end of the day. I pretty much captured pretty much 100% of that daily range. Like pretty much 100%. That's pretty nuts. If you think, like, that's pretty nuts. Like, there are people out there that believe that buying is just random. The trading markets are just random buying and selling pressure, and then people bought here and it went higher, and then some people sold, and then a bunch of people bought and it ended up going higher, and then it went higher, like, and then some people sold, whatever, right? Like, I used to believe that too, but, and I'm not trying to be like a dick about it, but I see stuff like this. It doesn't matter if this is my executions or someone else's executions. But yeah, like seeing this kind of executions, originally when I found ICT and seeing him trade like this, I didn't understand. I was like, how the hell can you be that precise? Like how can you be that precise? If it's random buying and selling, how could you get pretty much 100% of the daily range like that? Yeah. So that's why I believe that the markets are delivered by an algorithm, because using the logic that I look for value gaps, also all ICT concepts, using that logic, while price is literally printing live, I'm able to take a trade like this. Yeah, I get it wrong a lot of the time, like so much of the time, but sometimes I get it right, and then I get this, and it's just like, wow, that's nuts to me. Like, that's nuts. This is so obviously algorithmically delivered price action. It's obvious. So let's quickly, now why did I buy here and why did I sell here? Well, I bought here because there is a 4 hour value gap here. Let's mark this and move it across here. Okay, let's go back down to the hourly. Okay, so this trade I was showing you on the 15-minute, but I actually took this trade on the hourly chart technically. I don't really need to look down at the 15-minute chart. So here's a 4 hour value gap. It looks a bit different on the hourly, but this is a 4 hour value gap. As soon as price opened on this up close candle, have a look at the opening price of this up close candle. If you look here, the open, this price here, I put my cursor on that midnight open candle, you can see the opening price is 3865.7. Now see my buy here, +1 at 3865.2. So why did I buy at 3865.2? I'll tell you why. It's because my model is to buy for value gap below New York midnight open when I expect the daily candle to expand to the upside. And so all I'm doing, as soon as New York midnight candle opens here and trades down, just one tick down, I'm pressing buy. Now I actually ended up buying 5 ticks below the midnight open because of, I don't know, maybe I waited a second too long, or maybe there was a bit of lag or something, I don't know. But as soon as that trades down, I'm clicking buy and I'm buying that, and I'm putting my stop loss down at this swing low back here. Okay, so that's why it's plus, because we're trading already inside this 4 hour. If we'd opened up here, I would have waited until prices came down here, then I would have bought. But because we opened inside this 4 hour value gap, this is my buy location right here in this 4. Why? Because I expect price to find support there and go higher. So why would I wait for price to go below it? Or why would I don't expect price to go below it. As soon as we open inside that fair value gap, as soon as it trades down, it still has to trade down below. I don't want to get an entry above New York midnight. I want to get an entry below New York. By doing that, I'm ensuring I'm buying in a discount because I expect the daily candle to go higher. So when the daily candle forms and goes lower a little bit, imagine the daily candle, open, high, low, and close. It opens, it goes down, it creates a wick, it goes up, then it goes down a little bit off the high and closes. That's how up close candles formed. As soon as that daily candle opens and trades a little bit lower, I'm buying, expecting that that's going to be the low of day. And that's exactly what we saw. This 1 hour New York midnight candle opened, it traded lower. I immediately bought. I ended up getting entry 5 ticks below the New York midnight open price. Then price traded higher, obviously treating that as support. Using this as inversion for value up here, going higher. And now I just want to take a little look at the exit as well, because there's a very precise exit. As you can see here, I'm closing my position at -1 at 3916.5. What, Jacob? Why are you selling it? Why are you closing your position at 3916.5? Let's have a look at the daily high, right? Obviously, this candle here formed the high of day. Let's have a look at over here, high, the high price. If I put my cursor on here, we can see the high price is 3916.5. What's my sell here? 3916.5. Oh, Jacob, you literally sold the tick high of the day. How the frick did you do that? How did you guess that selling there would be a really good location to sell? Because I didn't know it was going to be the high of day. I just knew selling there is most likely going to be my best exit. That's all I knew. I didn't know it was going to be the high of day. It just happened to be the high of day. Because when you trade with these concepts in mind, because price is delivered algorithmically, you end up accidentally getting the high of day, selling the high of day. Because this is just a byproduct of trading well and using ICT concepts. That's crazy. I literally sold the tick high of the day. I could not have got a better exit if I tried. I could not have got a better exit this day. But anyway, okay, Jacob, why did you sell 3916.5? How did you know that would be a good exit? Well, what's the rules of my model? My rules of my model is at 11 o'clock, I have to close my position. Sometime during the 11 o'clock hour of trading, New York midnight, New York trading, 11 o'clock, I have to close my position, okay? So after I entered, I think I went to work, I went off, whatever, blah, 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 came back, checked the charts, and I seen price running in my direction, great. 9 o'clock, 10 o'clock, 11 o'clock opens here. Okay, now I'm sitting down at the charts, and I'm looking, and I'm going, okay, 11 o'clock just opened here, reading the order flow on the hourly chart here, realizing that this 10 o'clock candle just traded down into this 1 hour for value gap, and then had a really nice close above that. 11 o'clock opened and started to trade lower. But guess what? I didn't sell here and get scared that it was going to go lower and lower, and that was going to be my best entry. I knew that we're repricing towards these equal highs. Okay, this is a draw on liquidity, and price is going to act like a magnet, and it's going to reprice. It's going to draw to those highs like a magnet. Okay, so when we opened 11 o'clock and traded lower, I looked above the marketplace and I thought, okay, if we're repricing higher, this is the draw on liquidity, where would be a nice premium spot for me to close my position? And obviously, we have a swing high here, and hourly, we have these buy sides, this buy side equal highs, but it seemed to me, because I was watching a little bit of pricing here, it seemed like we may not get to those highs today. On Monday, I completely believe we will go through those and keep going higher next week. But I'm trying to close my session in this 11 o'clock hour. Why? Because 11 o'clock usually forms, quite often will be where the high of day is formed. Okay, it's another ICT. It's not really a concept. It just is a thing it's just a thing that he's taught. That if you go and backtest, you'll find out that it's actually really accurate. So yeah, go and backtest that. 11 o'clock forms the high of day a lot of days, or the low, depending on if it's a bullish day or a bearish day. But so I'm closing my position at 11 o'clock hour. I'm actually trying to close it at this swing high here. I thought, honestly, just This is just takes experience of watching a lot of live price action and backtesting a shit ton and trying to figure out yeah, a lot of experience in the market using these concepts and having these concepts in mind. I pretty much guesstimated, you know, I thought it would be highly probable that this 11 o'clock hour, I don't know if it was going to run to those highs, but I thought it could go to that swing high. Okay, so this candle's high has a lower high to the right side of it, a lower high to the left side of it. It's a swing high. Okay, there we are. We'll just put it in a dotted line. Get rid of this buy side because it never ran there. Okay, so this hourly swing high is what I'm aiming for. I think this 11 o'clock hour can reprice to that swing high. But if you zoom in here, you can see it actually went a little bit beyond that swing high. See, it went a little bit beyond it there. It went a few ticks beyond that. And I didn't sell. My position isn't at that swing high, my close position. It's at literally the tick high of the day. So why did I sell at the tick high? Are you ready for this? Looking back, let's look back at the previous price action. What do we have right here? A rejection block. Oh. What happens if we mark the quarterly levels of that rejection block? What price is the consequent encroachment of that rejection block? Correct. Yes, 3916.5. That is why I sold. That is why I closed my position at 3916.5. Is because I'm looking at 11 o'clock. I'm thinking we can reprice just above that hourly swing high buy side liquidity, and then just above that, just above it, looking back here, is this consequent encroachment level, and that was my premium absolute. That's where I put my take profit at, because I thought that would be a really nice premium spot to close my position, where pretty much most likely I wasn't going to get much more price delivery above and beyond that. Okay, and so as you can see, I actually ended up selling perfectly the high of day, the tick high of the trading day. Okay, very nice, very nice. I like. Great success. Yeah, so that's very precise. If you ask me, if someone showed me that when I was still trading, I don't know, like just support and resistance or whatever, I would be a little bit intrigued, to be honest. I mean, I was. That's what got me intrigued, seeing this kind of precision, ICT trading this kind of precision, and me watching him going, well, how that's very interesting to me. I should dive into this and learn more about it and see if it's actually true or not. And that's why I implore you, anyone else who's watching this video, I implore you to do the same thing. Just go into price and look for yourself, basically. Just look for yourself and see if you can find enough evidence for yourself, because it's different for everyone. Everyone requires different evidence to, I think, not to prove something to them, but to suggest beyond doubting, kind of like to I don't want to say prove, because you can't really prove anything really. Proving things is hard to do. But just go and explore and jump in and make sure you learn everything properly as well. Don't learn things from random people who don't know what they're talking about. Like, learn from ICT. If you want to learn this stuff, learn from ICT. That's what I have to say, because he's the one who he knows everything precisely, because he created these concepts, right? So I would say learn from him, and then go into price action and see if you can do this yourself, you know, because it's not random. It's not random, guys. Price action is not random. All right, but anyway, that was a good little chat. So I think I think we're going to head on to having a look at next week's candle real briefly, real quickly. Going into next week, guys, I'm going to be doing the exact same thing that I did this week. Okay, we're going to be trading the same model. We're going to try and take one trade every day of the week, depending on if we get an entry or if the daily FVG rule is in effect. We do actually have this 4-hour fair value gap just formed here. Something interesting to look for, I think. We could potentially reprice back into that. I'm not sure, but going straight into Monday, I do expect Monday to go above these highs and towards this 4,000 level next week. Currently, there's no real fair value gaps I'm interested in right now, but yeah, basically just bullish bias, potentially trading back down to here, but I'm just going to try and trade the model as is because I know if we just stick to rules and whatever, and as long as we get up close weekly candles, then we should see more profits. But if we have another losing week, it is what it is. Maybe that weekly candle ends up repricing down into that weekly fair value gap next week. It is what it is. Then the next week we would probably have a profitable week, so it's fine. So thank you guys so much for watching. I hope this was encouraging. I hope this video was interesting, intriguing maybe. I hope you learned something from it. I hope you took something from it, and I'll see you guys next week.